Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with the European Session Morning Outlook, and we'll start with the North American markets, where we had the monthly budget statement come out $7 billion better than expected at negative $53 billion. The participation rate in Canada, 0.1% worse than expected at 65.7. Net change in employment in Canada, 10,000 better than expected at 13.8 thousand. Unemployment rate in Canada 0.2% better than expected at 6.9%. The dollar clawed back much of the losses it suffered after the disappointing NFP this past week. However, the true test for the currency lies ahead in the FOMC rate decision. Volatility in advance of the event has been exceptionally high. This is part due to the importance of speculation surrounding the divergent monetary policy course of the Federal Reserve. We can expect that projections for growth, employment, inflation, and interest rates will be offered during this Fed meeting. The Dow was 11 points down, the Nasdaq ended 46 points down, the Dixie is up to 94.59 from 94.22. On Friday, the USD CAD ended 45 pips down, USD Swiss franc was sideways, and USD JPY had a small movement Friday, but is 120 pips down until today. Today we actually have no events in the calendar. However, for the week, we have quite important events. On Tuesday, from the US, retail sales ex autos month-on-month, retail control, and just normal retail sales month-on-month. Wednesday, FOMC economic projections, the interest rate decision, and policy statement, as I mentioned. And from Canada, on Friday, we have the Bank of Canada CPI core year-on-year and the normal CPI year-on-year. Alright, on to the European markets. European stocks sold off Friday, hobbled by sharp declines in bank and commodity shares, while investors flocked to the fixed income market. The euro was weak across the board last week, except against the pound, mainly because the Brexit fears are having a negative effect on the euro as well. Today we are waiting for the industrial production data, but the most important events from the Eurozone this week are the CPI on Thursday and President Mario Draghi's speech on Friday. Alright, on to the UK markets. We had a Tier 1 event on Friday, consumer inflation expectation. It was 0.2% better than expected at 2%. The sterling took a major downslide on Friday in the early Asian session of a series of polls. After a series of polls showed that the Brexit Leave campaign is ahead. One poll even gave the Leave campaign a 10-point lead. This triggered a massive sell-off of the pound across all major pairs. If Britons decide to become the first country to leave the EU, analysts are seeing the sterling drop to a 30-year low, 130-135. On the other hand, a vote to remain in the EU can result in a 5% hike in the price of the sterling. The FTSE 100 lost 127 points and closed at 6,088 on Friday, and the 10-year gilt yields closed at 1.48% on Friday. GBP USD 210 pips down Friday, GBP JPY 260 pips down, GBP Australian dollar 205 pips down Friday, GBP Canadian dollar 200 pips down Friday, GBP Swiss franc 205 pips down, and 65 pips down today. So major movements on the pound for the Friday. This week's events are quite important. We have CPI data. We have the Super Thursday. We have producer price index, input, month-on-month, year-on-year, output, core output, the retail sales month-on-month and year-on-year, and retail sales ex-fuel month-on-month and year-on-year. So quite an important week for the pound. Onto the Asian and Pacific markets, we had Chinese data. Foreign direct investment year-on-year for May was 1% worse than previous. Urban investment for May was 0.9% worse than previous and worse than expected at 9.6%. The industrial production was 0.1% better than expected at 6%. This is in China. And in China, the retail sales were 0.1% worse than previous and worse than expected at 10%. China's economy steadied in May as factory production held up and consumers and the government offered support against diminishing growth in private investment, which has been hurt by declines in old line industries such as coal. Asian stocks stumbled by the most in 2 months. The Japanese yen rose and sovereign debt rallied as investors piled into haven assets. The International Monetary Fund's number 2 official urged China to take immediate steps to tackle rising corporate debt or risk dangerous detours during the country's transition to a consumption-oriented economy. The estimated debt in China is $1.3 trillion. The Nikkei was 327 pips or points down Friday and 200 down today. This week, on Thursday, we have Japanese Bank of Japan interest rate decision and monetary policy statement. And we also have employment data from Australia on Thursday as an important event from the Pacific. Alright, last sector for the day, the commodities. Today there will be an OPEC monthly assessment of the production. Any production could affect the market substantially. Gold prices finished the week with impressive gains amid fading expectations of a Federal Reserve rate hike in the next couple of months. Oil futures ended the week sharply lower on Friday, tumbling almost 3% as market players continue to monitor supply disruptions across the world for further indications on the rebalancing of the market. Crude oil prices fell further in Asia on Monday, with investors awaiting further demand cues. Gold had a range of $13 at $12.77 now. Silver had a range of 21 cents at $17.90 now. Crude oil had $2 range, down at $48.49. And natural gas is trading at $2.57 at the moment with a range of 6 cents. And that was all for today. Thank you for the attention, and I'll see you next time. Goodbye.